that movement back through that low negates this as a downtrend and labels it a correction in an ongoing uptrend. And so we look to try and buy above that. Once above that, we then have areas to take part profits. So all I do is I just take a midpoint below this high and above this high, and that's where I'll take profit. Now, the trade ideas that you will see suggest taking 1/3 of that level, and the next level is where most breakouts to the upside and to the downside will fail. Just very quickly, the area I look at there is roughly around 1.27. This is a Fibonacci number. Again, I don't want to get into too much detail of how all this works because we really don't have enough time. But into this area here is where I take 1/3 of my profit. So I take 1/3 at the what I call NTP, or the non-trending profit zone, and another third where price tends to fail. This area here, 70% of the time, price will come back. Now, it can come back all the way back to the bottom, and in that case, you would form a trading range, or it can come back and then resume the upside move. So this is where I'm taking my part profits. The method, because of this, is a trend trading method, but also you could probably call it sort of an anti-trend trading method, in that we are taking profits before a trend develops. If price, for example, in this case, came back and then continued to move higher, we would take 1/3 of profit out at the NTP, the midpoint between the high and the lower high. We take another third out at the trade above the swing high, this one over here, the major high, and then we would just run a stop as time progresses underneath the swing lows until we get stopped out of the last third.